Most of this course covers the audit of the financial statements. But besides the audit, the CPA provides other assurance services. In this unit, we will cover reports on compliance with aspects of contractual agreements or regulatory requirements related to the audited financial statements, letters for underwriters, summary financial statements, auditing financial statements using a framework other than GAAP, financial reporting framework generally accepted in another country, single financial statements and specified elements, accounts, or items of the financial statements, personal financial statements, audits of single financial statements, audits of specified elements of financial statements, reviews for non-public companies, review of the public company, compilations, and financial statement preparation. You can see we've got a variety of items to cover in this chapter. Auditors who have audited a company's financial statements may be asked to go beyond the audit and provide assurance in regard to the company complying with a contractual agreement or a regulatory requirement. The level of assurance given is negative assurance. Here is an example of the report. A bank is asking for a report from the company's auditors regarding compliance with terms of the loan agreement. The key wording that provides negative assurance is "nothing came to our attention." In connection with our audit, nothing came to our attention that caused us to believe that the company was not in compliance with any of the terms, covenants, provisions, or conditions of Section 8 to 15, inclusive of the indenture dated July 21st, 20X with First National Bank. However, our audit was not directed primarily toward obtaining knowledge of such noncompliance. You must have done the audit to issue this type of report. Investment banking firms that underwrite a securities issue request a letter known as a comfort letter from the independent auditors who audited financial statements in the registration statement. The letter includes a statement that the auditor is independent, a statement as to whether the audited financial statements and financial statement schedules included in the registration statement comply with the accounting requirements of the Securities Act of 1933 and related regulations. 3. Unaudited financial statements, condensed interim financial information, and pro forma financial information. Changes in selected financial statement items during a period subsequent to the date and period of the latest financial statements included in the registration statement. Tables, statistics, and other financial information included in the registration statement. Negative assurance as to whether certain non-financial statement information included in the registration statement complies with SEC regulations is also given. Auditors can provide positive assurance for numbers 1 and 2 and negative assurance for the others. Summary financial statements are a condensed financial statement that clients sometimes want to include in various documents. They include less detail than the audited financial statements. Auditors who have issued an audit report on the audited financial statements may issue a report on the summary financial statements. The report must indicate whether they are consistent in all material respects with the audited financial statements. The auditor may do an audit using a basis other than GAAP. There are 4 acceptable comprehensive bases of accounting other than GAAP: the cash basis, the tax basis, the regulatory basis, and the contractual basis. Here is an example of the introductory paragraph for the cash basis. We have audited the accompanying statement of assets and liabilities arising from cash transactions of XYZ Company as of December 31st, 20X, and the related statement of revenue collected and expenses paid for the year then ended. These financial statements are the responsibility of the company's management. Our responsibility is to express an opinion on these financial statements based on our audit. If the report is using the regulatory or contractual basis, the auditor must speak regarding restriction of the use in the audit report. Our report is intended solely for the information and use of ABC Company and regulator DEF, and is not intended to be and should not be used by parties other than these specified parties. A U.S. company may prepare financial statements for use in other countries. An example, a U.S. company with a subsidiary in Germany may prepare financial statements for that subsidiary. Auditors follow general and fieldwork standards of the U.S. to the extent appropriate. The report depends on the expected use of the financial statements. If they're going to be used only outside the U.S., issue a U.S. report modified to reflect the accounting principles of the other country, or issue a report form of the other country. If they're going to be used in the U.S. and outside the U.S., you actually issue 2 reports. Number 1, a U.S. unmodified report with emphasis of matter paragraph indicating the basis of accounting. And 2, either of the 2 options from the only outside the U.S. above. Auditors may be engaged to attest only to 1, a single financial statement, such as the balance sheet, or 2, specified elements, accounts, or items of a financial statement. The example of specified elements might be a report on a lessee's revenue requested by the lessee, may be required by provisions of a lease agreement. Materiality for specified elements is generally less than would be in an audit in relation to the other information presented. The auditor may be engaged to audit a personal financial statement. GAAP for personal financial statements include assets are shown at their estimated current value. Liabilities are presented at their estimated current amounts. The balance sheet is the statement of financial condition shows individual net worth. The income statement is the statement of changes in net worth. Completeness of the personal financial statement is an audit concern. The auditor may be called upon to audit a single financial statement. The auditor may have to audit interrelated items. For example, when auditing the income statement, the auditor will audit sales. She may also have to audit accounts receivable. The auditor may be engaged to audit a specific element of the financial statements. Similar to the audit of single financial statements, the auditor may have to audit interrelated items. Examples are sales and accounts receivable, inventory and payables, and buildings and depreciation. Non-public companies may not need an audit of annual financial information. CPAs may provide a review service. This review attest service provides limited negative assurance. It follows the Statement on Standards for Accounting and Review Services, the SARS. The auditor will, under a review, perform analytical procedures, make inquiries of management and others, and obtain representation from management related to the financial statements. Here is an example of the final paragraph in the CPA's review report. The accountant's conclusion. Based on our review, we are not aware of any material modification that should be made to the accompanying financial statements in order for them to be in accordance with the accounting principles generally accepted in the United States of America. This is the limited negative assurance of a review report. Public companies are required to file quarterly financial information with the SEC on a 10-Q form. The auditor reviews, not audits, this information. The objective of this review is to provide accountants a basis for communicating whether they are aware of any material modifications to conform with GAAP. Here are the steps in the review. Provide an engagement letter to document understanding. Understand the client's business and internal control. This required understanding of internal control for public company reviews is not required for the non-public company review. The other review procedures we perform are similar to those of the non-public company. The compilation is a service in which the accountants assist in the preparation of financial statements without providing any assurance on them. In essence, the accountant compiles the financial statements from the client's records. The accountant must at least read the compiled statements for appropriate format and obvious material misstatements. If the client's information appears to be incorrect, incomplete, or otherwise unsatisfactory, the accountant should insist upon revised information. The compilation report states, "We have performed a compilation engagement in accordance with Statement on Standards for Accounting and Review Services promulgated by the Accounting and Review Services Committee of the AICPA. We did not audit or review the financial statements, nor were we required to perform any procedures to verify the accuracy or completeness of the information provided by management. Accordingly, we do not express an opinion, a conclusion, nor provide any form of assurance on these financial statements. A compilation is no assurance." Accountants may prepare financial statements. This is a lesser service than a compilation. Each page of the financial statements should indicate that no CPA provides any assurance on them. No report is issued.